So for our investors, we have a good group of customers that are great business people. They have great small businesses and they're really great with their taxes. Because they're good with their taxes, they don't qualify for homes oftentimes. However, they have the cash to go buy a home. Well, what does this mean? That means they're buying a home with cash. They may be buying a $700,000-$800,000 home and paying all cash for it. They may want to buy an investment home and paying all cash for it. They don't have to. We have programs where we take the bank statements from their businesses and determine their income and can give them a loan like anybody else. The interest rates, not very far off of what interest rates today are for most investors. It's not that far off, it's not that expensive. You just have to have the right lender that knows how to do that. Fortunately, we're one of those, so.
Yeah, they do a lot of
They
good.
offer grants for those too, even if it's an investment.
Investments normally
No.
don't have grants.
That's what I figured.
Investments don't have grants. When you think about like grants, don't think about grants with investment. Think about how much am I going to put down? Am I going to put down 25, 20, or 15? How much am I going to cash flow on this property monthly? And then as the property gains value, I'm going to refinance that property and scrape the cash off of that as I refinance. They're not as interested as much in the interest rate because their monthly income from the
Investment
the investment is so much higher than the interest rate. They're fine, right? So we have an investor that works with us. He's got 18 properties in 6 different states right now, and he'll call me up and be like, hey, here's the address. I'm now at 50% equity. I'm ready to take it back. And we're refinancing him, in various properties several times a year because he's doing that. He's got them highly occupied. And whenever he hits his number for an equity mark, he goes in, he takes his cash, and he's using that cash to go buy more properties. So.
Snowball effect.
It is.
Yeah, but for investment, you have to remember the best product is with 25% down.
Correct.
25%.
That is a very good point.
Why?
Because you get the best rate. You get the best mortgage product, right?
Correct. So the point is, at 25% down, you're out of your loan level pricing adjustments. You're not getting hit on your interest rates. That's your optimal point for what your best interest rate's going to be for your lenders, whether it's with me or anyone else. So 25% down
It's the best
is an
product.
excellent down payment, whether you're an investor or a regular residential buyer.
Let's talk about different mortgage products. A lot of people don't even know about. You can get 10, 15, 20 years mortgage instead of just standard 30 years mortgage.
That's very true.
Let's talk about those because not many people even know it exists.
Correct. So we have a lot of customers that they, for one reason or another, they want a 15, a 20, a 30 year. Some of our buyers out in California, they want a 40-year mortgage. So we actually go further out than 30 as well. So there's different loan products out there for different buyers. The key point that we want to make with everyone is express that up front to your lender. Say, I don't want to be in a 30-year fix.
Yeah.
I would like to have a loan for 10 years.
Yeah.
Just simply a simple explanation and conversation is all it takes.
But one thing people need to understand, you have 30 years versus 20 years. So the less years on your loan, the higher monthly payment. And
Correct.
that's the trade-off. You're trading years on the mortgage for monthly payment. Like we tell the kids, you can have it all.
Correct.
You cannot say $2,000 monthly payment if you're gonna go to 20 years. So your monthly payments is gonna go higher as you're shortening the term. I can't speak.
Absolutely. So think of it like a
length
balloon.
of your loan.
So if you shrink the number of years on your term, your monthly payment's going to go higher. So your interest rates on a 30-year will typically be a little bit higher than a 15. We'll have a lot of customers call up and say, I want a 15-year, quote me on a 15-year mortgage rate. And so we'll go do that. And then they'll turn around and say, well, I want that 15-year rate on a 30. Unfortunately, it doesn't work like that. You will get a better interest rate. You will not pay as much interest over the life of the loan. Now, what we do talk to a lot of new home buyers, if you want to take your 30-year fixed and turn it into a 15, make one extra principal payment a year, and as you do that over time, you turn that 30-year mortgage into a 15, and you can save it organically that way.
Yeah. But if you make one extra payment a year on 30 years mortgage, the rumor has it, it reduced it by 7 years, right? So if you continue doing it year after year, that's taking years away from your mortgage, and a lot of people don't know it.
Correct. It's a great way to save yourself some money over the long term.
What are the ways we can save money doing mortgages?
Oh, good way to save money on mortgages. One very good way to save money on a mortgage is when you pay attention to what the homes in your area are selling for. If you bought a house for 5% down, you have mortgage insurance. If all of the homes in your area are starting to sell for drastically more than what you paid for it, there's a very good chance that 2, 3, 4 years from the time that you bought your house may appraise to where you can do a simple appraisal for $500, $600, get your house valued at what people are selling for, and with the equity that you put into your house, you may be able to drop out of your PMI and save yourself sometimes $100 a month in PMI.
How soon
for $500.
How soon can you reappraise and get rid of PMI? Is there rules like you have to be in house for a year or two, or
12
you can
months.
12 months?
12 months?
Yeah.
So
How soon can I refinance after I buy a house? Is it 6 months, 12 months? How soon? Because if I'm buying today at 6.6 and January comes and we're at 5%, can I just say, hey Ryan, let's refinance? How soon can I do it if I just bought a house in December?
So it's a free market. You can refinance anytime. It's how often are you going to be eating all of those costs?
Fees, yeah.
Those fees and those costs will still apply, and financially that's not going to be very viable in most cases inside of 8, 9, 10 months. So
But-
a good rule of thumb,
Rule of thumb.
we tell people you want to start thinking about a refinance when you're at 1% reduction in your rate and you're 9, 10, 12 months out.
But
That's
if
when
the
you really
rate
wanna do it.
from 6.6% in December drops to 4%, you would suggest let's talk about refinancing.
If it goes to 4%, then
Call
please
me.
call everybody. Yes, we're refinancing everybody.
So 2% should get every homeowner
Please.
excited, no matter if they were 9, 10 months or not,
if
right?
we do that, it'll be on national news, and
Well, we
I'll
know-
be the happiest guy in the world.
So if people want to make Ryan happy, how do they reach you?
Call me at 513-513-5899.